This is a, if you have seen that, it's a very, very interesting panel, not the lender alone. Is there, he is a sort of, I will not take much of the time, but you say that, hello? Huh?
It's working.
So if you have seen that, it's a very, very interesting combination. We have consulting firm who, like that extreme right, the gentleman is there, who keeps a very close tab what's happening in the housing sector, micro, region specific, macro, trend, everything. We have Sandeep Menon, who was runs a company which has gone through, like, I have Sandeep, if I'm not mistaken, I think 2016 you started, and one after another, right from demonetization to GST to COVID, everything you had seen, but you're doing remarkably well. Probably what's the key to this, we'd like to know. We have others. We have one person again, this from AIF, if I'm not mistaken, that alternate investment fund, very different from the normal lenders. So we will hear from you. What's the Rungta from original HDFC? We'll hear from that. We have Mr. Stuart Take. Thank you, board member IMGC. And finally, we have Abhinandan Lodha from the community of builders. So we will have a 360-degree view of what's happening in the industry. Building a resilient housing finance ecosystem. That's the subject. And I will take a very, very 2 or 3 data points just to kickstart. What are they? So just first one, as I already said, that outstanding housing loan portfolio as in June 2023 is 30.7 trillion. Just little over 30 trillion. Of course, by this time it has grown further. As we already discussed, between HDFC Bank and State Bank of India is about 45%. Banking system will be close to around 80%, and rest of our all non-NBFCs. Year-on-year growth as on mid last year was 15%. So that's the thing. And other relevant factor, which is very important, not so, nobody will be surprised from the experts, I mean the community of experts, but others who don't track for them. Now, as a percentage of GDP, the home loan, where does India stand? India is 11% versus Netherlands 91%. Imagine. Denmark 84%, UK 69%, USA 52%, Germany 49%, Singapore 44%, Japan 39%, Malaysia 34%, Thailand 20%, China 18%. So we are talking about becoming the third largest economy, but when it comes to housing to GDP ratio, we are nowhere among the top 10, 15, 20. We are very, very low. So there is things are happening, but we need much more. With this, I end here, and in the next 40 minutes, they will hear only you. I'll go by alphabetically. Abhinandan, it's your turn, not because you are sitting in the extreme left. So tell us, you are not a conventional builder community you are representing, because you are actually in the second home kind of thing. And Mr. Khara, who was telling us that the SBI is excited about lending in the second home for the second home project, etc. Of course, he meant in a different way. You are actually in the luxury segment, those who can afford in Goa or anywhere else, or I think Ayodhya also you had in it. Was it planned earlier, or just because Ayodhya Ram Mandir you decided to have?
No, we planned it 3 years ago.
Achha, planned it 3 years ago. Achha, very smart move. So you sense it. Huh? So tell us, how do you find this, both from the angle of the buyers of these properties, and also how do you generate the finance for this? Briefly, we'll have 3 minutes each kind of thing, sure, and then we'll have a wrap up.
So I think one thing which we have seen is the world is changing quite fast, was becoming frictionless. So we, for example, are a digital-only company, which essentially means that we have never met a consumer in person. No consumer has ever met us in person. Our idea is that most of these buyers are looking at this investment in terms of wealth and investment of storage of wealth. So the mortgage ratio they take is actually quite low. Less than 4% of the people actually end up borrowing. And the conversion is from people who are looking to come back and plow back money into the country, understanding that wealth in land is going to generate multiple times over.
Tell us a related thing, you know, people, all of us who want to buy, whether it's first home or second home typically, and particularly after COVID, people have realized how important it is to have little spacious home, because most of us have transported the office into home for 3-4 days a week. So one is this, one, we always want to get into a ready-made house where everything is there. I'm not saying that it has to be well furnished, but actually the housing thing. And there is a tendency to be with a needle of suspicion that should we get into house and land particularly, you know, that's because of the land records, because of the opaqueness and everything. So how do you sort this out?
So I think the better thing
Our
is...
buyer's approach to land, I mean.
So I think the buyer's approach to land starts with the process of education. Land records in most of the states are moving towards being digital. If you're willing to have the burden of transparency onto yourself and allow digital shareage of land records, most of the issues get taken care of. Which
Sandeep, because S, all my one is A, and then 3 of you are S, but Sandeep is A. So your turn. Tell us, as I said, when I introduced you, that you got in there and then immediately demonetization came, and then the ILFS, DHFL, the big peaks in that space, they fell down. COVID, everything was happening. So if I'm not mistaken, when it comes to Vastu, I think you are probably very strong on digital area in terms of assessment, credit assessment, picking up customers, etc., etc. So tell us about your journey, how easy or how difficult it is.
Thank you to you, Tamal, to the IMGC and the Business Standard team for having me here. And I think very interesting times we had when we started. So I've been a career banker, and when I set out to do affordable housing, we set out on this journey in 2014. I think we got change of ownership and control by the end of 2015. So when we started, we had, I think, 50 crores of capital, 65 crores of loan book. Couple of lenders we had, the HDFC Group and Sundaram were our first two lenders. And some others willing to lend to us when actually we were hit by demonetization. So I think there was obviously a lot of anxiety and a lot of stress. And we were fortunate, Tamal, that our shareholders and lenders supported us. We were a professionally run, institutionally managed, board-run company even at that time. That helped us. And I think it made us very resilient to be fit for growth, because we didn't want to be in a situation where we don't want to be in a situation where we can't pay salaries, or you don't want to be in a situation where you can't repay what you've borrowed. So those were our criteria at that point of time. But I think the resilience of the ecosystem, so we've gone through, as you said, from demonetization to the NBFC, that challenges around the NBFCs or the HFCs, a few rounds of COVID, and I think it's been quite challenging. It's not the best environment to build a mortgage financing company, but the opportunity, the runway for mortgages, as you only mentioned, and with 11-12% mortgage penetration, and in the space that we operate in, hardly 4 to 5% or even lower penetration. And if you break India beyond the top 40 cities, the next 200-300 markets, and where the urban and the rural divide blurs, it's a massive opportunity. So I guess it was a function of figuring out the right opportunities, being fit for growth, and as a relatively late entrant, building your own technology, building your own data science, and having normal aspirations in the sense that we didn't want to do anything in a hurry, build it patiently because we believed the opportunity was large. We had patient capital, continued to raise capital and debt along the way, had engaged with rating agencies and others on an ongoing basis, and had general support from the ecosystem, and also calibrate and slow down growth when we had to during those days.
Just one small thing, what's the bad asset ratio in your portfolio?
We are around 1.1%.
Sorry?
1.1%.
1.1%. Okay, we'll come to that. Shobit. Shobit is from the consulting firm, Anak. And I couldn't understand this. They are also, you get investment banking, MD and CEO investment banking? What's
That's
that?
right. I'll just quickly introduce. So, Anarok Capital is basically in the business of arranging money for the developers to see all these projects go up. And we also incidentally do a lot of home loans because we are the largest home sellers in the country. So, we sell almost 25,000 homes every year. These are newly built homes.
So in some sense, you have the view of both the sides. One is the retail segment, the demand side, the buyers, and on the other hand, the challenges that the developers feel for arranging the money. So we could not have a better person than you to talk about this. So tell us what are the challenges.
Yeah, I know. Thank you so much. And obviously it's tough to speak after the chairman of SBI has spoken about home loans. But I'll tell you what's happening on the physical aspects. Right, loans can be taken only if properties are built and sold. Right, so basic footprint is that there's demand for real estate housing, and it's increasing. We've been in this business for 20 years. And it's rare, it's almost a rare opportunity where we are seeing that the demand for new homes, newly built homes, have doubled from the low of COVID. We were selling less than about 2 lakh homes a year. Now we're going to touch 5 lakhs. Not only that, it's the highest ever sale since the previous peak of 2014. So it's really taken us 10 years to come back. What's unique about this market and this time is not only are the sales up, so volumes are up, but also the pricing is going up. And the third very interesting aspect, and I'll let Vipul speak about it or deliberate a little bit more, is we are moving away from affordable housing. I think most of the people sitting here obviously want to worry about how to give loans to absolutely the starting point, the affordable ones, but actually less and less affordable housing projects are coming in the country. We are gravitating towards mid-market, upper, then super luxury, right? So the demand profile is changing, right? And most of the 25,000 homes that we sell, almost 75% are people who are buying with home loans. And out of that 75%, nearly 80% of the people are so-called salaried class. So it's a formal sector. It's the people who are struggling are at the bottom end and from the informal market. And nobody better than this panel to really tell us how that segment is going to be served, both in terms of where the supply is coming, and by the way, if supply comes in, how are they going to be served by home loans and what's really going on, because the delinquencies, I don't know if we can debate this, are higher at the lower end of the market. I think that's what the chairman of SBI also alluded to, saying that's the little bit of trouble. Rest is fine, but the government wants us to build housing for the bottom of the pyramid, and that's a little bit of a challenge, and I think Vipul will probably address it better, but I'm going to stop here and hand it back to you.
Yeah, so we thanks. Of course, Vipul will come alphabetically. Stuart has to come before that. But tell us, Vipul, you have actually hit the nail of a problem. Is this you are saying that, well, there are many takers, there is too much of demand for housing on the upper scale, but when it comes to the bottom of the pyramid, the so-called affordable housing, there are no takers. So I have just want to ask you, I'm just provoking you, what does that mean? Does that mean that the K-shaped recovery that we have been, all the economists have been talking about, yes, Indian growth story is very real, we are growing, you look at IMF, World Bank numbers, we are the fastest growing economy, major economy, even for next year also 6.5%, nobody else even half of it. I mean, look at China, wherever else and all. But is this the very skewed growth? It's not for everybody, which is why the segment that for the affordable housing, there's a big challenge, and while people are going for, ready to spend millions of dollars in that convertible into rupee for houses. Is that the right
So
reading?
I'll answer the question in two parts. One is from a demand perspective, what people want, right? I think what people want is a little bit more room at every level, right? So if you have a 4-bedroom house, you need the 5th one. When you don't have a house, you need 1 bedroom, but perhaps you need 1.5 bedroom, right? So even people who are starting at the very bottom of the pyramid want a little bit more space, especially emerging out of COVID, they've realized that they need a little bit of elbow room. What we have done by defining the affordable housing as something being less than 45 lakhs, right? What we've done is we've said price is yehi hoega, aapko jo banana banao. So the houses have shrunk. For that, at the bottom of the pyramid, the houses are shrinking because my price point is going up, my construction cost is going up. Government definition says 45 lakhs, तो उनको 250 स्क्वायर फीट का घर मिलेगा या 250 स्क्वायर फीट का या 300 स्क्वायर फीट का, which doesn't serve their purpose. So they are actually falling off as the government definition of affordable housing. Okay. So they will probably want to spend 55, 60 lakhs, but that doesn't then qualify for affordable housing. So I guess we have to go back and relook at what the definition is and what is the right amount of, what is the qualifier for affordable housing. Today it is 45 lakhs.
That's the one part you said. Second part you said this is
Second part is, I fundamentally said that the demand is moving towards a little bit higher area. So post-COVID to now, and you know, there are not many developers in the room, but actually our house sizes or apartment sizes have increased. What was 800 square feet has become 900 square feet. What was 1,000 square feet has become 1,200. That's the demand. So I'm saying the demand itself is seeking a little bit bigger apartment to make sure that they live well and they live healthy.
Sure. The higher end demand is going up, and you are saying it is a time to redefine the concept of affordable housing. 45 lakh pricing is too low.
Yeah, I think we should get away from pricing to unit size, right? Okay. To say what is the right way. Why should we lock ourselves with pricing? Pricing in Calcutta will be very different from pricing in Ahmedabad. But why should we say 45 lakhs? We should say a good quality house should be defined as this, right? This is the minimum size of housing that somebody should get.
Sure. Thank you. So here, Stuart Tick, who is the board member of IMGC. Thank you for coming all the way from somewhere in New York. You are coming from, and North Carolina, and you love Indian food, right? You love India.
I do.
That's for food or for people.
Well, the people first, and then the food.
Okay. People first, then the food, and then the mortgage market comes. So tell us, what should India learn from different regions, like be it Singapore, Malaysia, everywhere else?
Yeah, so I think when it comes to market resiliency, it really is about developing a culture of trust between lenders, consumers, and investors. I think it's really that simple. And that gets down to 2, 3, 4 elements, the first of which is developing a sound infrastructure around lending norms, underwriting, appraisals, title insurance to the extent it exists in the market, foreclosure laws, collection laws, things like that. It needs to be consistent. It needs to be consistent across the market. I think the second thing that's important is strong regulatory oversight, which is pretty broad when you think about it. It involves not only financial soundness, but it also involves things like financial inclusion, and it involves making sure that there's consumer protection laws in place so that people are willing to take the risk of borrowing money. And lastly, I think the environment needs to be set up for investment, and not just local investment, but investment from foreign players such as multinationals. And I think where possible, the investment needs to be diverse in nature, equity, debt, as well as securitization and things like that in nature. And I think those three things pretty much de-risk an entire environment to allow for a resilient ecosystem.
Yep. Stuart, if you can tell us a little more. I mean, you being a board member of IMGC, and IMGC is about now a decade in India. So you have got an opportunity to look at the housing market here.
Yeah.
Right? So how it is different from others? Because, you know, it's always the community of builders, no offense intended to you, Avinandan, but always people are talking about lack of transparency. Of course, RERA is addressing that and all. And we are always paranoid about booking flat somewhere which has been coming up. We do not know whether there will be cost overrun, how much, time overrun, how much. So in some sense, this is one area, it's still not as transparent as that should be. Is it, how does this Indian market, how is it different from, apart from any of the other challenges, per capita income and affordability, that's the economic story. But in terms of habit and the contour of the market, how is it different from other markets?
I think India is fairly transparent market. I don't, at least at the consumer level, I don't see any issues whatsoever. And it's not that way globally. I won't go into specific markets, but it's just not that way globally. Transparency certainly helps out, and it builds that trust I mentioned in terms of the ecosystem. And I think one big lesson was during the financial crisis, 2008, 2009, where there were some exotic products out there, at least in the United States, and there was a lack of transparency, and borrowers certainly didn't know what they were getting into. We don't see that lack of transparency in the Indian market at all, certainly in the areas we're dealing with.
Vipul, you want to say something about this lack of transparency and all? Yes, no, not Vipul, sorry. Abhinandan, I'm coming to Vipul towards the end. Yeah, tell me. Am I too harsh when I say this, or do you think there's genuine reason for this?
No, I think there is a historical track record which justifies a thought process that developers have not been the most transparent breed.
Little louder. Huh?
But as things are changing now, and as the market is clearly realigning the difference between transparency and lack of transparency, including from the demand and borrowing side, I think it will lead to a slow push, quite a rapid push actually now, which will force transparency across the board.
Vipul, he sold you too much now from the beginning. I don't know, you must have a pact before coming here that... Yeah, so he kept on saying that Vipul will have the answer, Vipul will have the answer. And incidentally, because you V, so he comes at the end, so go V for victory. Tell us, he says you know everything. And Vipul is from HDFC on AIF fund. Probably you are the largest fund in the real estate segment, or was it Kotak? Is it Kotak's? Or?
It depends. You are the statistic guy of the statistics, so maybe you will know, but at least the statistics I have, I don't think how large you are as a fund defines your identity. I think in the fund business, what returns you're making is more important. So I can very safely say that at least our investors feel that we are one of the best performing funds.
Who are your investors?
So we are in fact the largest relationship for ADIA, which is the sovereign fund of Abu Dhabi, NIF, which is the sovereign fund of India, and about 3 or 4 other family offices.
Okay, so tell us what are the issues. I particularly, again, I'm repeating that on the supply side. Like I want to buy a flat, or anybody else wants to buy a flat from here, the banks are chasing, and after a year I can shift my loan to some other bank who's ready to take over my thing at a 25 basis point lower, my EMI will go a little lower, so on and so forth, all these things. But when it's come to builder, supporting them, there are not too many entities, because the Reserve Bank of India norm does not allow the banks to go for, to support buying land. So that's one part of it. Second part of it is the so-called lack of transparency. You don't know how much cost overrun, how much time overrun. It's a little bit of opaque thing and all. So tell us that what exactly, how do you sort this out? On the supply side, the builders, how do they get finance? So that, it's not only one side thing that we look at this side, but how, if the other side does not support, we cannot have a perfect mortgage market.
Okay, let me try and break it down just to give perspective, because you quoted some numbers, Tamal. You said mortgage is about 11% of GDP.
Yes.
And you talked about the book being about 3 trillion rupees.
30.7.
300 trillion. So let's say in dollars terms, say
30
it's
lakh
about
crore. 30
so
lakh.
So if India's economy is about $3.5 trillion,
Yes.
We are talking about a mortgage book of about $400 billion.
Yep.
If India becomes and we are 11% of GDP.
Less than 400 even now.
Approximately. So if we become a $5 trillion economy, and our mortgage percentage goes from just 11% to 15%, as against 91% of anybody else, we are talking about an incremental mortgage requirement of $350 odd billion. Now this 350 or 370 billion dollars, for every $350 billion of demand side financing, which is financing the buyer, the corresponding number from supply side, like the fund that I run as part of the HDFC Bank group now, is a supply side. That is, my job is to finance the developers to do projects, is about 10%. So what is 350 odd billion dollars is about $35 billion is the size of the book on the supply side. So you need an incremental $35 billion, assuming the ratio remains the same,
Yes.
only to finance all that.
Yes.
And so that's one. That I'm talking in terms of the numbers. To the question about why credibility and why this thing. See, traditionally it has been, as we all know, a complicated industry. Repeatedly, globally, why is land financing not allowed? Land financing is not allowed because there have been global financial crises that have happened because the lenders have been over aggressive on funding of lands. What happened in the Asian crisis in 2008 and so on and so forth. And I think the regulator has been fairly conservative in India, and which explains why active lenders are not allowed to do real estate financing. Having said that, it is trying to push the development community to bring equity on the table. Case in point, what is happening in the last 24 months, equity can come from public markets, equity can come from capital market, from private equity markets, equity can also come as lending against his other projects into this. And, you know, in China, before a RERA kind of a thing happened 20 years back, there is not a single developer who had a market share of more than 1%. Post a RERA equivalent in China, the top 10 developers had a market share of almost more than 50%. Something of that sort is gonna happen in India, because as the effects of RERA, consolidation and everything happens, more professionalization will happen of the industry.
In the world of developers.
In the world of developers. And as professionalization happens, I am not be surprised if SBIs of the world and HDFC banks of the world will start approaching them with much more alertness and say, okay, fine, they're part of the mainframe.
Abhinandan, do you agree? There will be sort of reshuffling and rejigging in the entire world of your real estate segment? He's saying consolidation. That's what you said, right?
I think consolidation is
Little louder.
so consolidation is quite clearly on the go. It's happening. It doesn't mean the smaller guys won't exist. It just means that there'll be a very large difference between people who are large, are able to command a premium, have a brand and are able to borrow at a cheaper cost, and people who are able to look at real estate the old way and say owning an asset is more important than being able to own it as inventory. So consolidation is the buzzword. It will continue to happen for some time to come.
No, say for example, 4 years back, not a single developer in India was selling on residential more than 10,000 crores a year. This year, I think there will be at least 8 to 9 developers who will be selling more than 10,000 crores a year of residential stock. There will be at least 2 who will sell more than, or 3 who will sell more than 15,000 crores a year. So obviously the consolidation is kicking in.
So are you happy with whatever said, or any question you have? Absolutely, I agree with this. No, that though you already did before they even started. You guys tied up. But tell us, you are happy with his answers or want to add something?
Yeah, no, I'm absolutely in agreement. And I'll just give you some numbers. At COVID times, we were selling 200,000 homes, that's 2 lakh homes. And the share of listed developers in this 2 lakh was 19%. Today, we are selling 5 lakh homes, and the share of listed developers is up to almost 39%. So consolidation is the way to go, because transparency has come, everybody needs the balance sheet, book size, etc., etc. Not many developers can afford to continue to grow as fast as those that have very healthy balance sheets and correspondingly very good corporate governance.
Yeah, and if you look at the stock prices of some of the developers, that also shows, no, the change.
That also shows
how they have been
the market cap,
growing.
of course, has gone up for the good developers. Yeah.
But at the end of the day, I think developer financing still it's an area of concern, because I understand that there are particularly the smaller developers, they get hold of some people, and those actually become a proxy for the developers. And I think in your parlance called profile funding, something like that it happens, right?
I think it
Yeah.
used to happen. It's things of past. So let's leave that out. I think post RERA all this is stopped.
Okay.
There is no question of profile funding and all of that. It's gone out the window. So
let's-
good times are here, at least for this sector.
Let's have a small round, maybe a couple of minutes each, or 2-3 minutes each maximum. That's what, after that we'll have Mr. Parekh, have a conversation with him. Rounding up, starting with you. Sandeep, tell us that what I was talking to Mr. Khara, State Bank of India chairman, like NBFC and HFC. There are two types, like the normal NBFCs give money to housing finance, and there are also dedicated HFCs which will give anything and all. Now, the HFC and NBFC, unless then HFC is where the operational cost is in single digit like HDFC had, okay, so that they could work on 2% NIM kind of thing, because there is operationally extremely efficient. But otherwise, considering your cost of fund, you need to go to a segment which is not catered to by the bankers, right? Now, NHB is a big financer of yours, your kind, meaning I'm not talking about you, but your industry and all. So who are the others they can fund you so that you are able to bring down the cost of funds and change the profile of the customers? Or will it be the permanent architecture of Indian mortgage segment, the banks, salaried class, or those have income kind of guarantee, etc., etc. And your kind will always go to the backwaters or others, that kind of segment, and the difference between bank lending rate and your lending rate will continue to be maybe 2 to 3 percentage point. How do you change it?
So Tamal, I'll just answer your question in a couple of parts. First of all, if you look at demand for, say, affordable housing, so India, if you take out the top 6 or the top 10 cities, which is where the urban agglomerations, the large apartments, and the apartment business is there, is one part of the business. Large part of India is self-construction and individual houses and rural housing. And that's the singular biggest opportunity. That is what, so if you go beyond the, say, top 40 cities, into the next 200, 300, 400 markets, and into the markets where the urban-rural divide blurs. And as Mr. Khara said, if digital land records, if strengthening of RERA, and in terms of making sure that, say, something like a uniform stamp duty across states, if some of these things actually happen and affordability goes up, then there is a genuine market beyond the apartment business. Because India is a self-employed country, and self-employed Indians build their own houses in the smaller towns. That's where the real prosperity is. The GDP that we are seeing, the GDP growth is not just from the urban markets. And it's about self-construction. It's about every time there is a marriage in an Indian family these days, in small towns, a new house is looked for. So that's where the small demand is coming from. And I think I agree with the fact that size should be the definition. But you have to differentiate, say, the top 125 districts in the country, the next 200 districts, and the balance. And how do you see a set of districts that are growing way beyond the GDP? And also prosperity that's coming in. So I guess for people like us, if we are in a situation that we have to compete with our own lenders in the same business, then we'll be out of business.
That's precisely I'm asking you, that you are taking money from banks and giving to the guys who are banks also are prospective customers. So how do you manage that?
So I'll give you a simple example. Self-employed is not lent to that much. So there is an opportunity for us to make our 2-3% in the smaller towns, in the smaller markets. And that will continue to be a growth driver. And today there are many different pools of debt capital. The bond markets are again opening up. There's a lot of multilateral and significant amount of other funding that's available. So it's not just about NHB refinance or borrowings from public sector banks. And I think recently NHB has come up with RMBS and mortgage-backed securities, where I think HDFC and ICICI and a couple of others are taking stake. So I think a mortgage security market is developing in India. Refinancing of various who's will happen. So I think what you see in the US in terms of what a Freddie Mac or a Fannie Mae, you will see a lot of that happening in India. And a lot of that, while there is massive opportunity in the premium segments or the higher end segments, there is a uninhibited runway for the next 30, 40 years, I would say, for the smaller towns, for affordable housing, and for a variety of other things to grow sustainably, peacefully. And I think the railroads have been built. There are tested trade bureaus. So the self-employed, the MSMEs and others, and the people who are actually buying these houses are willing to pay you that extra because they're going to stay in those houses. And when you bet on a self-employed Indian who's staying in their house, your probability of default is not that high.
Thanks, Sandeep. You spoke about Freddie Mac and Fannie Mae of US, and nobody spoke about UK building societies. I'm talking about that. And better than that, what was created in India, that's HDFC, one single product company, mortgage, and the gentleman who made it, Mr. Parekh, just walked in. So give him a big hand. Give Mr. Parekh a big hand. We'll have, sir, we'll have a 5-7 minutes, then we'll have a conversation with you. Tell us, Shobhit, give us a sense of the markets. Like from you, we'll to hear which are the overheated market, what's the most expensive market, what is the demand maximum, so on and so forth. Give us a little macro picture of India, what's happening, and maybe you'll help Sandeep to plan his strategy, where to go, because he is competing with banks, right?
I'm not.
Taking from the bank's money. He's not. Okay. How to avoid competition? Tell us.
Look, urban, like he pointed out, Sandeep, saying urban and rural is a big divide. In India, we track top 8 cities, which roughly constitute nearly 90% of all the sales. So
90%
of the sales are done by value, are done in these top 8 cities, right? Within those 8, MMR, which is Bombay, followed by Bangalore, followed by Delhi. These cities of that 90% are close to 60% of the sales, right? So these 3 cities are big magnets, call them alpha markets. That's where the growth is as far as real estate housing is concerned. Then of course the markets keep shrinking. You have Chennai, you have Hyderabad, you have Calcutta, Pune, Ahmedabad. That are the rest of the market from the 90%. It's really, these markets are between 4 to 5% each from a volume perspective of the overall India sales, right? Of course, there's Bhopal, there's Jaipur, there's Goa, right? All of these markets are active, but these are basically markets where people like to build their own houses, buy plots, build slowly, and what I would call them expandable homes. So you start with 2 bedrooms, you need more up space, then you build upstairs, so you build sideways. It's not that you buy at one go. And these are built as you go sort of markets, very, very different in values, very different buyer profile, very, very different way they operate. So really from a banking perspective, when you look at your own exposures, I think these 3 markets will be more than 50% of your books, no matter what you do. While we'll all love to lend in smaller markets, but the reality is that the demand is in these 3 markets.
And how do you see the pricing? How do you see the pricing?
Pricing is up everywhere. Bombay was the first to start going up, followed by Delhi, followed by Bangalore. Obviously, Bombay is where wealth creation is done the fastest because the stock market is here. I think people love to invest in that market. And that market never shut down even for one day during COVID, right? So it was working no matter what. So really people have made a lot of money in the last 3-4 years in the playing the stocks. All of that money, when it's pulled out, a lot of it goes into real estate. Now, of course, Delhi and Bangalore are also seeing that trend. So we think these markets will continue to go up in price, but correspondingly the cost of construction is also going up. So it's not that the margin for the developer is increasing, it is that the margin is sort of sustained because costs are going up, and so also is the revenue.
So with just last one thing in a minute, does investment in real estate does it continue to be was as important as lucrative as someone else? Because people say we don't keep all the eggs in one basket. So I have in the stock market, I have into gold, and I have into real estate, and predominantly it was real estate about a decade back. Has that
So
come
for
down?
10 years, we got beaten down.
Yeah.
If you spoke about real estate, they say you stand outside the room, don't be in the room where investments are being talked about. So for a very, very long time, we were outside the game. We have just come back because prices have started to move.
Okay.
But as the single largest broker in the country, even today, 95% of the homes are only being bought by end user.
Users.
End user. There is no speculator like was the case in 2014.
So
right?
pre-RERA.
Yeah,
Pre-RERA era.
pre-RERA, we are very, very self-used or self-occupied homes.
Yeah.
And by the way, like any other country, you spoke about so many countries, Denmark, US. We are the only country that consumes our house for at least 3 generations. Our friends in the West live in 5 houses in their life. Where they are born, then where they grow up, then where they're married, then where they go before they die, and eventually somewhere else, right? So we guys live 3 generations to 4 generations in the same house, and we are very reluctant to upgrade. So we will make ourselves inconvenient, but we will continue to stay in the house even if it falls a little short, because we like to stay with our families, right? So it's a very different way to consume our house, and therefore it's a very long-term investment. It's very liquid.
Thanks, Shobit. Stuart, tell us some suggestions, stroke advice, how to pep up the mortgage market. 11% of GDP, and we are talking about how to push it up, how much investment is required and all. So give us some, from an outsider, insider's perspective, what do you think the Reserve Bank of India should do, or as a regulator, and the government should do?
Yeah, so I think one thing for sure that would help stimulate the housing market is a proper securitization market. I know there's whole loan sales, what we can consider whole loan sales. I know there's pass-through certificates, but I think a proper government-sponsored securitization market would greatly enhance the financing into the system and probably stir international interest. I think the underwriting norms are very sound in India. I think moving more towards exotic products or loosening of underwriting guidelines would not be a very good idea at all. I do think certainly mortgage guarantee gives people comfort, lenders comfort when it comes to the lending. So certainly the development of that area would help as well.
Thanks, Stuart. Very brief. Vipul, you said that you don't know whether your fund is the biggest, but investors are the most happy because you're giving them return and all. So tell us, a fund like AIF in that space and all, what are the challenges we discussed and all? But what is the way forward? I mean, how do we make this the other side, supply side, the way there is always fight among the banks, among the lenders, to get the customers. So one bank is snatching the other customer and all. But that's not happening on the supply side. It's more shortage of funds. So a few suggestions and advice from you.
I think I remember while growing up, there used to be a thing of from the House of Tata which said that we also make steel. Yep. And I think as a financing community, especially from the fund community, that part has to come in the real estate side. Case in point being that today, if I'm a venture fund which is doing general venture financing, it's not only the financing that you're providing strategic inputs, you are giving them product related inputs, you are helping them scale up their organization. I think real estate developer set, notwithstanding some of the established ones, is still a growing community, and the financiers need to play a role which is way beyond just providing capital. Whether it's debt or equity, it has to be strategic in nature, it has to be product specific, it has to be how to help them scale up. And that, in my opinion, results in the delta which funds and various other banks can operate, because otherwise, if it was just cost of financing, then the lowest cost capital provider would have super majority market share, which is not the situation. And I think coming from HDFC, the whole play has been that it is beyond what money I'm providing. It is what is the value add. And I know of developers who are dealing with the organization for 3 generations, 4 generations, not because you're providing capital, I think it is about what kind of inputs, what kind of credibility and other aspects which are provided. That becomes a key factor.
So beyond capital, handhold them, which some of the funds do, and HDFC of course known for its giving training to people and how to approach, to cut down the cost overrun, time overrun, etc., etc. So you are saying that is very, very critical in addition to finance. Finance is correct, but beyond finance.
Yeah, absolutely. Like we talked about areas, I think devil lies in the details. Shobhit talked about 6 cities. I think this market is about the next 25 cities. Every big city today is not a big city. It is a conglomeration of, in a 1 hour radius of this place, what I could travel 5 years back and what I could travel next 5 years will be totally different. And with all the infrastructure that is going around. So what will happen is that there will be a hub and spoke kind of an ecosystem, which a lot of major cities will happen. When that happens, it is critical that you are able to emerge what are the next 10 big cities or next 10 emerging investment areas. These are the kind of inputs that the developer community would want, and that is where the financiers who have much more data points can provide.
Thanks, Vipul. So, Shobhik, is it okay? Fine, whatever you have said?
Absolutely. Vipul saying the right thing, that infra is changing the context.
Yeah. So, Abhinandan, so Ayodhya, are you, because Bachchan said that he is buying land there and getting a bungalow, and he asked everybody to buy because of the, for multiple reasons. So would you also sell your stuff to all these people, Ayodhya property and all, big discount here? Dene wala hai kuch? Huh? Okay, on a more serious note, yeah, I mean that you can do this outside this, over dinner you can sell your property, that's not an issue. So, but you are the only developer here in these 2 panels and otherwise. So tell us, I mean, what is the way forward? RERA has brought a lot of transparency, but as I said, before anybody books a flat, not even second house, which is you're very different, you're offering a second house, that's a separate story. But even the first house and people buy that, whether it will be in 3 years what you promised or it will go for 10 years, how much money, etc. These are all litigation, everything you see particularly in Mumbai. So how do we change the perspective or the how we look at, the masses look at the developer, the community of developers? What is to be done, you think? Some soul searching just in a minute.
I think there is already a massive change underway because of RERA, and you see the amount of litigations and questions which have come down quite substantially. I also agree to what Vipul was saying India is changing very, very fast, and growth and future is going to come in tier 2 cities where people have not had this kind of a bad experience, where people have seen developers being much smaller but delivering what's been committed. So I think as tier 2 India changes to tier 1 India and good quality developers go there with today's RERA regulations, etc., it will mean a massive addition to consumer confidence, which will add the next generation to come.
So thank you, and that brings us to the end. You have heard them. Yes, the market is not too large, but all the ingredients are in place on the table to grow, and how the things are changing. He's talking about how the tier 2 cities are becoming tier 1 in terms of affordability and aspiration and ambition. You spoke about how the affordable housing needs to be redefined because things are changing. So things are changing for the better, right? With that happy note, give them a big hand, please. And we will start with Mr. Deepak Parekh after a minute or so. Thank you, sir.
Thank you so much, panel members and Tamal, for that incredible set of panel discussion. At this juncture, can I request Mr. Stuart Levings, President, CEO, Sagan Canada, to hand over a token of appreciation to all our panel members. Ladies and gentlemen, few takeaways are need for holistic and balanced growth across social stratas and income levels in India, need for developers to take on more affordable housing projects, rising demand for bigger homes among the middle class Indians, affordable housing to go beyond price points and include amenities as well, and developers needing to be more accountable and maintaining transparency with buyers to build trust. I think exceedingly candid and insightful. Ladies and gentlemen, let's build the momentum of conversation which is bound to leave us with many meaningful triggers. In a few moments from now, we'll be actually witnessing a riveting fireside chat, which will also entail Mr. Deepak Parekh, Chairman HDFC Life and HDFC AMC. So I would request you to please stay back as we get started with our next set of fireside chat. Thank you once again, all the panel members, for sharing your perspectives in such a candid, perspicacious and pragmatic manner. Thank you.